Welcome back, guys. Nick here. This is going to be another market review following the Sunday market blitz. So every single week on Sunday before market open, we'll present to you guys 12 plus pairs that we analyze, mark up, come up with trade scenarios, and we drop that to you guys in preparation for the week, right? And then we let things play out. We take some trades, we follow the analysis or don't according to how things play out. And then we'll review it at the end of the week, show you guys how we did, see which way price action followed, how it followed our analysis, if at all, and pretty much just take away what we can from it. So let's dive right into it. We start off the analysis on Sunday with DXY. So this is the dollar index. It shows us the dollar strength overall. And it's good to be aware of the dollar strength because the dollar makes up for 80% of all trade. It's the reserve currency. So it has a lot of impact on the market is the whole point, right? So when the dollar is doing something significant, you'll kind of see that reaction on other pairs. So we just analyze this. It's more or less an indicator giving us the strength and weakness, of the biggest market mover, which is the dollar, right? Okay, so that makes sense. Okay, so let's go into this analysis. Last week on Sunday, we saw this was, it rallied, came back down. We're looking for structure at this point. We know that, this is obviously influenced by news. We're looking for, a higher low, something that is normal to us, that's normal to, market structure. And that would be, to find support at 96.35, get a nice higher low, and then a continuation to the upside. If 96.35 failed to hold as support, we're looking for price action to break below, form some sort of lower high, and then continue lower. I'm sorry, this is a higher low. If we're going bullish, we're looking for a higher low above 96.35 and then a lower high below 96.35 if we're going bearish. I messed that up, my bad. So we had our two trade scenarios. We're waiting for reactions, and then we were going to follow it according to how it's playing out. So let's just play it forward, see how we did. So it didn't come all the way back down to 96.35, but it did, come back a little bit, form a higher low close to the area, and then took off from there. So the bias was right. The dollar continued bullish. We broke through major resistance at 97.25. So now we'll have to reanalyze this this Sunday and come up with a new outlook for the week ahead. So we're looking for more structure points above this level now, looking for those higher lows. Okay, we just want to keep tracking higher with normal price action, right? You don't want to just see a pair ever just kind of tank to the downside or just take off and never come back. There's a huge lack of structure there. It's not sustainable. As much as it goes up, it's going to come back quite a bit as well. So that's what we're looking at here. This was a pretty big rally. So the next point of a higher low is where we're looking. So some sort of pullback structure, and then we'll look for the same continuations to the upside. Okay, so that's DXY. Let's move over to AU. This one was overall bullish. We were at the low of this channel here, and we were kind of dancing around a key zone, 0.72. This is obviously massive resistance right now, where price action was on Sunday. And the likely thing here was that this 4-hour trend was going to continue bullish, right? So we were looking for a nice break back above 0.72 with a higher low above, confirmed with nice bullish setups. And this would have been a great long opportunity up towards 0.73. Okay, but we were aware of the opposite. If price action were to reverse, what do we need to see, in order to consider short opportunities? And that would be a break of this higher low here in the channel. We'd catch a nice transition, looking for lower highs below 0.7145. Then we would be interested in shorting from there. So let's see how it played out. Okay, so we broke back above 0.725. Didn't get the higher low we were looking for, but the overall bias was right. This thing kind of just took off. Okay, we broke 0.73. We're a bit overextended now, so we definitely have more analysis to do. But overall here, the bias was there. It didn't pull back. Maybe there were some trade entries here on the break, but from this analysis, it didn't play out 100%. Really, the only thing that was perfect here was the way it moved. Okay, so that's AU. Kind of just took off and kept running. Okay, let's look at AJ now. So this one is similar. Overall, in the higher time frames, we're pretty bullish, pushing into this weekly resistance at 83.25. But once we hit this level, we could see that price action struggling a little bit, meaning it's moving sideways. It's struggling to break resistance, and then it's also struggling to push lower and reject off of resistance. So this is flatline movement. This is essentially a range. We identified these two levels, the weekly, of course, and then this minor level, 82.6. So we wanted to wait for the range to finish forming and then trying to enter on, the breakout, which would be if we were to go long. If we were to go long, we're looking for a higher low above the weekly, right? So it'd be a nice break above, catch the higher low, which we've failed to form in the past on all these attempts. And the opposite's true if we were to consider short opportunities. We want to see a bearish break of the range with a lower high below. Something also we failed to get on all these attempts over here. This one looked pretty good, failed to follow through, but we're looking for something similar. Nice retest of 82.6 with a lower high that we could then enter short on. So let's see how this played out. Okay, and this did exactly what we thought, right? It followed through with the bullish scenario, broke resistance at the weekly at 83.25, came back, retested, formed a higher low, and then confirmed. So it followed through, gave us a nice morning star, and then started taking off from there, right into our expected level, 85 resistance. Nice psychological level. Definitely a logical target. We didn't get greedy and choose 1,000 pips. This is good. It's a good trade. So this one played out pretty near perfect. So we'll have to reanalyze this, look for more structure points for next week. All right, let's move over to UJ. This one was also pretty bullish. Okay, now we had a little bit of a fake out here. There was some consolidation, attempted breaks of support here at 115. Didn't really give us a lower high below or anything. So this was an area of extreme interest because this was an attempt to kind of change the 4-hour bullish trend to bearish, because if we did get a lower high below 115, that would have been a full transition. We would have been looking to short, target lower on UJ. So it was interesting while that was happening. But, it popped back up. And then here on Sunday, this is what we were looking at. So we were looking for this to kind of follow through with the higher low, give us some nice bullish setups, and then start aiming towards 116.25 resistance, right? Just trying to fill the channel, play it out, and then just ride the trend up towards new highs, essentially. If this was a fake out right now, right? If it was a fake out, wasn't going to push higher, we're expecting the same thing to consider this bearish. There's a break of 115 with a lower high below. Okay, that'd be the transition that we've been waiting for. But until 115 is broken, we're pretty much bullish. Okay, so let's see how this played out. Okay, high volume stuff, but no real direction. So we were in this area, it failed to push higher, failed to follow through. Instead, it came back down, tested 115, found rejection, came back up, gave us like this weird double top. It's just a weird, the way this formed is just odd. It's just high volume, like ranging essentially. There's no real direction here. It's just high volume bouncing. So here's the high, here's the low. It came back down again. We are below 115, but still too early to say anything. In my opinion, UJ just moved sideways. Technically these two trade paths would still be valid for next week, but I am gonna reanalyze this, clean it up, make it look a little better, and just simplify things. So yeah, UJ was a bust. Nothing really happened on that. Went up, went down, went up, went down, pretty much at the start of the week. So let's move over to EJ. This one was a little more clear, pretty good structure, overall bearish, nice bearish channel. Okay, so the most likely thing was that we were going to continue with the bearish channel, which would leave us looking for lower highs just below 130. So I want a price action to come up to 130, reject a little bit, give us the lower high, and then continue the channel. And then this is where we'd be looking for short opportunities. Okay, now if price action started pushing up and broke 130, really cleared 130, came back down, gave us a higher low, and then confirmed with bullish setups, bullish variations, whatever, this would be a transition. This would be enough for us to start considering 4-hour bullish trend here on EJ and start looking at some long scenarios. Okay, but let's play this forward, see how this did. Okay, so it didn't come up as high as we wanted to. However, it threw wicks pretty damn close to 130 and then continued lower, as we expected. Just riding the trend here. Very, very simple trend trading, right? Just trying to catch lower highs to enter short on. Just riding that channel, riding the trend. Okay, so here was the lower high, and then it broke 129, came back up, wicked it. It actually looks like it missed it by like a pip or so, this zone that we have labeled. But either way, this was the lower high below 129, which further confirmed that we were super bearish here on EJ, and we're looking toward lower targets. So this was another great trade. AJ and EJ really, really killed it this week. This was also a trade in rapid signals, which a lot of people profited on. So congrats to all you guys who did. Yeah, great trade on EJ. Let's move over to gold. This is the last one that I got for you guys. And I actually analyzed this on the daily time frame. So last Sunday, I'm looking at this. I'm seeing this this daily chart, and I'm seeing how overextended this is, and then I see this giant wick, which is probably like one of the biggest volume wicks on gold I've seen in a pretty long time. And it just shows that there's no real confidence here. This is just, it's very overextended. We have lack of structure. We need to see more. So when this happens, when we get, you know, a surge of volume and things become less clear on the lower time frames, I like to jump up and start looking at some higher time frame structure to get a better idea of kind of the macro and where I should be looking. So that's what I did on gold here. We zoomed out. We took a step back. Yes, it's overextended. The most likely thing is that we'll continue to reject off 1930 and start heading lower down toward 1870, where maybe we'll get a higher low, maybe we'll get structure. But the first thing we were looking at is for price action to kind of curve out, start rejecting harder off 1930. And if we were to consider this actually bearish, we wanted to see the break back below 1870 with a lower high below. Okay, so we really just needed time on this. The daily gives us that, you know, 7 candles for the week only. So you're looking at, you know, not that much until we get to a key zone, and then we can you know, make trades. But right now it's far away from what I call a comfortable zone of trade, right? So what happened? What happened throughout the week? Price action just continued higher, you know, kept surging higher. I mean, this makes sense from a fundamental point too. I mean, there's a lot of things economically going on. And when you see uncertainty in fiat currencies, a lot of the time people will move their money into reserve currencies or safe haven currencies or commodities. Gold is actually a safe haven commodity. So when things are uncertain, or, you know, we have big economic news, or, you know, news of war, you know, you'll see assets like this start to spike. DXY will start to go up, gold will start to go up. And even though they're inversely correlated, you know, they're both appreciating or gaining interest just because of the, you know, economics going on, global economics. So it's pretty crazy stuff. So there's not much else to say on gold here, other than we just need to see more. I mean, if you're holding this, if you bought from the low, you've been riding this trend, good for you. Keep holding this, keep managing it. But yeah, we're effectively above 1930. I mean, we're almost at 2K, which is what we saw. Hopefully this chart loads all the way back. No, it doesn't. Nope, it doesn't. But 2K has been the number that we hit. That was kind of like a shocking high, and now we're almost near this area again. So yeah, we gotta wait for normal structure. I really want to see if gold is actually going to stay above 1930. But until then, you know, not much else to say, not much to trade on gold. But yeah, we'll reanalyze this anyway. Take a look at it again on Sunday. But yeah, that's it, guys. It's been another Sunday Market Blitz review, Friday review. So enjoy the rest of your weekend, guys, and I'll see you on Sunday. Peace.